All right, let's dive in and demystify one of the most powerful tools out there for any trader, chart patterns. It doesn't matter if you're in stocks or crypto, we're going to break down how you can find real actionable opportunities that are basically hiding in plain sight on your charts.
Because let's be real, when you first pull up a price chart, it can just look like, well, pure chaos. It's just a jumble of random, jagged lines moving all over the place. So the big question is, how do you find any kind of signal in all that noise?
Well, the trick is to start seeing these movements not as random noise, but as a story. Chart patterns are literally the language of the market. They give us a way to understand the psychology behind it all, the push and pull between buyers and sellers, and to spot those critical moments when the balance of power might be about to flip. And that is the absolute key right there. These patterns aren't just some random shapes we're looking for. They're a visual picture of the fight, the battle between the buyers who are trying to push the price up and the sellers who are trying to push it down. These patterns show us in real time when one of those sides is starting to get tired. Okay, so let's get into it with a true classic. We're going to focus on one of the most common and honestly most intuitive patterns out there, the double top and the double bottom. And trust me, once you really get the logic behind this one, you can apply that same thinking to tons of other patterns. So what exactly is a double top? Let's break it down. First, you need an uptrend. Prices are moving up. Then, the price hits a high point, pulls back a little, and then rallies again to try and make a new high, but it can't. It stalls out right around the same level as that first peak. That failure right there, that's the signal we're looking for. Now, what's so great about this slide is how it spells out the change in the story. See, on the left, that's a healthy uptrend. It's all about making new higher highs, one after the other. But look at the right. That's the moment of failure. The buyers gave it a shot, they tried to push higher, but they just didn't have the juice. Their momentum is fading. And the double bottom? It's just the exact mirror opposite. You've got a downtrend, price hits a low, it bounces, and then it comes back down for another try, but it fails to make a new lower low. And that's our cue, right? It tells us the sellers are just running out of gas, and the buyers might be gearing up to take over. Okay, so it's one thing to spot a pattern, but how do you actually trade it? How do you make a decision? For that, we need a clear trigger. We need a line in the sand that tells us, okay, this pattern is confirmed, it's time to pay attention. And here's the simplest way to do it. See that neckline, that little valley of support between the two peaks? That line is everything. When the price breaks down below that line with some real conviction, that's the confirmation a lot of traders are waiting for. It's a signal that the sellers have officially taken control of the wheel. And you guessed it, the exact same logic works perfectly in reverse for a double bottom. Once the price can break above that neckline, it confirms the sellers have lost their grip, the buyers are stepping back in, and a whole new uptrend could be on its way. Okay, time to level up. Because spotting a pattern anywhere on the chart is good, but understanding its context is what separates the amateurs from the pros. This is where we start adding more layers of evidence to our case. So here's the deal, and it's a really important distinction. A good trader, yeah, they see the pattern. They spot the two lows, they see the neckline. But a great trader, they see the context, they see where that pattern is forming on the chart, and they understand that the location can be just as important, if not more important, than the pattern itself. So what does that mean? Well, think about it like this. Imagine you see a double bottom pattern forming, but it's not just happening anywhere. It's happening right on top of a major pre-existing support level. Now, you don't just have the pattern traders like us looking to buy. You also have all the support and resistance traders looking to buy at that exact same level. You get this confluence, this pile-on of buying interest that can create way stronger momentum for the move higher. All right, you ready for a really cool pro-level technique? This is how experienced traders can sometimes get an early edge, and it's all about changing your perspective, basically by using a magnifying glass on the chart. Okay, get this, because this is a total game changer. Let's say you're looking at a daily chart and you see a candle with a long wick on top at a key resistance level. It looks like a simple rejection, right? But what if you zoom in on that one single candle and look at it on a lower time frame, like a 6-hour chart? You might find that a whole perfectly formed double top pattern played out inside that one candle's price action. It gives you so much more detail and conviction that a reversal is really happening. Okay, before we wrap this up, I have to share what the source material for today's explainer calls the single most important concept for trading these patterns successfully. And it's this: You have to remember that the market is imperfect. It's messy. The patterns you find in the real world almost never look like the clean, perfect examples you see in a textbook. So those lines you draw for necklines or support, you have to treat them more like zones or areas, not like razor-sharp, exact lines. Seriously, think about it. If you sit around waiting for that flawless, textbook-perfect setup to appear on your screen, you are going to miss almost all of the really good opportunities. The skill here isn't about finding perfection. It's about learning how to operate effectively inside a noisy, messy, and imperfect market. So the next time you pull up a chart, don't just see a bunch of random lines. Ask yourself some questions. Is there a battle happening here between buyers and sellers? Is one side looking like they're getting exhausted? What story are your charts trying to tell you?